Hey there, welcome to the Stocks with Josh show. Thank you for hitting the like, say hi in the comments. I have to start off today and I gotta thank Stock Up with Larry Jones, who did me a favor yesterday and made a video actually on my page. This guy is a super busy guy. I believe he had already done 3 videos that day, and this was not planned. He surprised me with it. I had been kind of telling him that I was a little stressed that I couldn't make a video because I was traveling, and he decided to jump on, do me a favor, and make a video for me. My favorite comment that I got on Larry's video was from a guy that said, "Hey Josh, what's the ticker symbol for the company that's making that tanning lotion? These guys are onto something." Well, anyways, it was too funny. Thank you, Larry. Larry talked about some of his recent successful trades. He gave the family GEHC, which I then later covered and provided technicals on. I told everybody that it was a buy at the $67 range. I bought at the $67 range. It has since shot up to $74 and was a huge payday for anyone who participated. Thanks, Larry, for that play. It's been very profitable. If you made some money on that play, please let me know in the comments. All right, guys, gals, we're in a super critical moment in the markets where actually a ton of money could be made or lost. So I know this video in particular can be very helpful to many of you guys who are trying to figure out which direction these markets are going next. Is the market giving us technical clues as to where it wants to go? I believe that it is. But timing is the critical factor, as always, to getting the trade right. We don't want to be too early. We don't want to be too late for this big upcoming move. I'm going to cover the big picture of what I see the S&P doing in the days ahead, and I'm going to look at some Chinese stocks like I had promised you guys the other day. As I predicted, that spy weather balloon was almost a non-event. It caused a brief pullback, and then most Chinese stocks popped right back up. And I said that in my last video, that all bad news for me for China right now is actually something I view as a buying opportunity. Their stocks got oversold sooner and harder than a lot of other assets, and I believe that the lowest lows for most of them may be in the rearview mirror. I'm going to queue up some fresh technicals for you guys on 4 of them today. We're going to cover T-Com, Baidu, Baba, and Tal. And then I'm going to cover the broader market and the big picture view ahead. Like, subscribe, and hit that YouTube notification bell to join the Stock Josh fam. Check out the offer from the Moomoo Investment app in the top pinned comment. They're currently offering 15 free stock. Take a screenshot of the offer to get the full details. These guys have that free level 2 data, the lowest margin account rates, a free stock screener for finding hot stocks, and their 8 smart order types for protecting capital and locking in profits. Click the link, get the free stock. Start investing today, and then you can come find the chat group that I host on the app called Stock Josh Fam. Okay, I'm going to rapid fire some technicals. Even if you aren't investing or swing trading these particular stocks, I think it'll be helpful for you to see how I evaluate the charts. Let's start with Baidu. Now, I feel bad because I got into Baidu yesterday and I was going to do a video about it for the fam, but I was just too busy, and today it just skyrocketed a 10% price move up. Now, technically, this move was so extreme that in my view, it may pause, digest the move, and then come under some selling pressure. It does have support at $152.30, and it's currently up against a very strong fib resistance at $158.90. I think it's very possible that we could see it sell back beneath that resistance line. Baidu was a mere $73 in October of 2022, a fraction of its recent glory, falling from around 80% from its all-time highs of $354. Yet, from its recent low, it has climbed approximately 120% in just the last 90 days. For Baidu to be truly bullish and attempt to move back towards its all-time highs, I think it has to eat up a lot of supply at around $172 and $184, which we have yet to even see, and we may not see very soon. It is likely that Baidu will retest $132 before it finds the momentum to move up and break out above $184. The current move up is at resistance, but it doesn't mean that the move is over. Baidu is still on sale at these levels. I have it on my watch list to swing trade at key levels of support. At the moment, Baidu is an extreme overbought territory on the RSI, Relative Strength Index, which means that it's heated up too fast. The 44 analysts offering 12-month price forecasts for Baidu have a median target of $170, with a high estimate of $235.85 and a low estimate of $101. Now, I'm a long-term investor all day under $130 for Baidu. I've made money on the recent move. The volume that we saw coming into Baidu today was shocking. There was a 571% increase in buying today, which really signals that right now the buyers are showing a lot of strength and interest in Baidu. Let's do Baba, Alibaba, aka my cash cow. What is next for Alibaba? Now, Baba had a run-up before Baidu and has been cooling off over the last 11 days. Now, I called Baba perfectly, to the penny. Matter of fact, some months back, before it hit $59, I predicted that it would break down and hit that low, and shortly later it did. Some of you guys heeded that prediction, you bought that dip, and you guys made some big bucks alongside of me, writing it up recently to a high of $120. Now, I've spent so much time trading Baba that I literally have its candles visually burned into my brain. I can see it with my eyes shut. My most recent prediction was that we would test 120. Now, I made that prediction when it was around $100 after it had come up from $59. It vacillated at that range for a while, and it didn't look like it would make that final jump. And I remember somebody said in the comments section, they made a smart remark and said, Baba was down today, and what happened to your $120 prediction? Of which I replied, we shall see. Well, in recent days, we saw that move did hit $120, and since then, it's been cooling off. Now, I've also told the family on the chat group to hold off on buying Baba right now until we get back to the $100 range. Specifically, I'm watching $98.67. I'm going to buy that range for a back test to $105 for a quick trade. Now, don't follow me. You do you. This is not a suggestion for what you should buy, sell, or hold. To successfully trade these markets, you have to make very fast decisions. And to be honest with you, I believe you have to have a good amount of money or have a very small position size and not be in too heavy to one trade. Because if it goes south, you're going to need some money to possibly bail yourself out or hedge the trade that you're in. Sometimes that looks like doubling down. Sometimes that looks like buying a put or a call against your position that you're going in. I take positions that don't do what I expect them to do at times, but I have the resources to fix the trade either by hedging or doubling down. If you don't know how to do that, then you need to be more cautious in your trading until you gain that level of knowledge and that level of confidence. You show caution by always using a stop loss and controlling your position size per trade to prevent one trade from wrecking your account. Now, today, Baba is sitting at $104, still 67% down from its all-time highs. Baba, in my view, is still cheap, and it's the only Chinese stock that I have in my long-term retirement account at the moment. I intend to add Baidu if we get back to $130. But for now, Baba is my big Chinese stock holding. Baba's volume has been decreasing. It's down 15% today, which just proves it's still cooling off. So we want to be patient. Let it come to you. Trade quality right now is favoring going long, even at the current price, but I feel like it could dip that additional amount to the $98 range that would provide me a lower risk in getting a better price entry. So again, we shall see. Quick review of TCOM, that's one of Larry's picks, TCOM, and Tall Education, that's one of mine. If you have followed me on Tall, you know that I called $5.80 as a buy price over a month ago. That's my next entry. And it held up around $8 for quite a while. It teased a reversal, but ultimately fell off, and in recent days, it's begun to move towards my expected support range. We're getting very close, and this is typically when retail people lose interest because they love to buy green candles and they miss the big moves. I'm gearing up to buy some red candles on Tall once we break below $6. It's always possible that being patient like this could cause you to miss the move. But like I said, I like to stick to my trade setups. I don't have to get in on every trade. Even if I'm close to getting in, sometimes I miss them because they don't get all the way down to my buy price. I'm okay with that. There's always stock to be traded to make money in the markets every single day, up and down. What I like to look at, and I've been talking about it a lot with you guys, is the buying volume. The buying volume should increase if it's becoming time to buy. I'm going to notify the family because I'll likely move fast and I'll take a position. My target one take profit for Tall in the days ahead is $9.21. And it did make me a little nervous because the volume did jump today 30%, and so that's a sign that people are gearing up and getting ready to buy this. So I know that we're getting close to a buy. If it gets to $5.80 and the volume is low, I'm going to watch for re-entry at $5.56, which would be the next level of support. This is going to be another one like WVE, where some people get in early, they get stopped out, then they walk away from the trade. For me to come back later and say I followed the plan and I'm up $2, stop loss on WVE right now is set to $5. There has been a decrease in volume. Volume was down over 50% today. If that gets triggered, I'm looking for a buyback at $4.60. I want to remind you guys this is for educational purposes. It's not for you to follow me. In regard to Tall, put it on your watch list. Follow the trade visually on YouTube so you guys can see what happens. Let me know in the comments if you've traded Tall before, if you made some money in the past, or if you didn't, let me know in the comments. Okay, let's touch on TCOM. This is actually one of Larry's trades, as I said, that I began to watch and I began to dabble with it. I'm looking for re-entry at $33.09. I want you guys to take some notes on that one. We will revisit it in about 2 weeks. Volume is down 22% today, which again tells me it's in a cooling off phase. Let's take a moment, let's step back and talk about the markets and the big picture. I've been comparing this current recession that we've been in to past recessions. And the one that's beginning for it to resemble in performance is the 2008 Great Recession. If that comparison is correct, then later in this year, the markets could have another 50% down move from where it's sitting at. Now, there are some data points that don't align though, such as the fact that some sectors of the economy are still showing signs of strength, such as manufacturing and the labor market. What is aligning the most is how the stock market has been trading similar to how it traded back then. I think the reason we got people like Michael Burry, who successfully called the past financial crisis, is because he obviously is seeing some of the same things that I'm looking at in the charts right now. I don't want you to get it mixed up. Even though the markets are bullish right now, there's a lot of people looking at the same things and realizing that we are not out of the woods. One of the charts I've recently been studying is selling pressure. The market shows us that the June low was actually the peak of selling pressure since the recession began. Now we know that later in October, the markets dropped further, but not at the same level of selling pressure. This is all about momentum. When the markets see that the level capitulates, like we saw in June, that typically should mark the bottom of an average recession. And it could be seen as a valid buy signal to begin to go into accumulation phase for investing. When the markets got that signal back in January of 2008, the Great Recession, after the markets had dropped for most of 2007, when that signal fired in 2008, that was only the beginning of the bear market ahead. But many began to load up and get back into their desired positions. People were buying back then only for the markets to later completely fall off the edge. Could the same thing be setting up to happen now? That is what I'm watching carefully each and every day. One of the confirmations that I'm seeing that reminds me of this being very similar to the Great Recession back in 2008, 2009, is that this time, when we got the moment of capitulation in June, that should have marked the bottom of the move, and we shouldn't be breaking that low. But we've seen that we saw deeper lows in October, and then big tech in December. We saw it get to 52-week lows. We should have climbed from June until now, which we've not. I just wanted to throw that out there for you guys today, get some feedback from you. I'm going to cover this more in a future video. If you haven't been winning in these markets in the last 2 weeks, I just want to say don't get discouraged. There is always money to be made on Wall Street. It just takes courage and preparation. As always, I want to salute the soldiers of the chat. Peace and blessings, my friends. I'll see you in the next video.